Hey, TGO traders, welcome to Thursday's Market Sit Rep here at Top Gun Options and Challenger job cuts. Lowest level since 2000. So what's that mean? The number of planned layoffs in U.S. companies imploded by 32% in December, and that is the lowest number in 13 years. So instead of a planned 45,000-ish, we only saw 31,000-ish. Still sucks if you're in a 31,000-ish group, but obviously better than forecast. So that, along with weekly jobless claims, came in a little bit. Along with ADP numbers yesterday, is the job market starting to thaw? Now, remember, with these weekly jobless claims, Congress has been back, and they haven't extended the emergency or whatever it's called, the long-term unemployment claim. So we might see 1 million, 2 million people roll off of those things. Very, very sad. I mean, people who have been on unemployment for that long and can't find work. But as we've talked about at Top Gun Options, and I don't want to sound like Gordon Gekko here, but the empirical data suggests that the longer that you pay somebody to be on unemployment, they are unemployed, period. I mean, a Harvard study, huge studies, but then you listen to the government, and the government says, well, the longer we keep people on unemployment, it adds to the GDP, like it's a good thing. Okay, Mr. President, then why aren't we all on unemployment if it's such a benefit to the GDP? Oh, right. I'll do the math for you. So, very, very interesting, all the data this week. It's very interesting leading into a non-farm payrolls report on Friday when you get this type of data. Because I think tomorrow when we get non-farm payroll and the unemployment rate, ADP crushed it north of 200, and the consensus out of the government number is 194. If this thing crushes it, I don't think we see a rally. I think we still are in this transition out of bizarro market where a rally or where good jobs numbers, the market says, crap, the Fed really, really is going to leave. So we're probably looking at another $10 billion getting out of this month. There will be a time over the next 7 to 9 months as the Fed exits their quantitative easing asset purchases that the market says, maybe this economy is strong enough, it's not hitting on every cylinder, but pretty close, that the Fed can leave, and good news is good news. So really good jobs numbers might be good news. I don't think that's this week. Okay, we saw what happened on Wednesday, but Wednesday is forgotten about by tomorrow morning at 08:30. Okay, so ADP numbers are good for about literally a day and a half of Wednesday and Thursday, and that's about it. Friday is the all-important number, and then obviously average hourly earnings are going to be able to give us some insight into the labor market as well. If average hourly earnings are stagnant or going down, really doesn't matter that we're adding a lot of jobs. People aren't getting paid that well, and they're earning less, which means they spend less, and the economy kind of muddles around through the economic Vietnam that we're in. Okay, so got my eye on over here at Top Gun Options on 3 weekly options trades that are hot, cold, and medium. Twitter, another downgrade out of Twitter. It's the most hated analyst stock. I love it. For the past couple weeks, Twitter's been downgraded only to rebound. Okay, and I'll tell you one of the reasons is institutional support. Okay, so last week I had a bull put spread. I sold a bull put spread right there. Monday, halfway through Monday, right there in our weekly options live trade brief, and boom, earned a full nearly $3,000 on that trade. It bounced right off those analysts. I think it was 2 that downgraded it. Twitter downgrade. We got a little bit of a pop. Here's a Twitter downgrade, and we might have a pop today. So there is institutional support, in my opinion. There's a lot of big money betting on Twitter to be that next LinkedIn or Facebook, and I think this 60 level really is the institutional support for Twitter. So starting to see a little bit of a recovery. So I have a couple weekly options trades I'm going to hang on to until tomorrow, because every day as a seller, as a net seller of something, every second that you're watching this video that goes by, we get theta. we collect time decay on positions that we sold. And I sold an iron condor, so obviously the bear call spread of this iron condor isn't in any danger at all. But we need to get this thing a little bit north up to about 62, and that could happen in a stock like Twitter in a blink of an eye. We're already up 1.5% at the open here. So that old hey, I hate Twitter analyst. I think his buddies are laughing at him right now because there you go. Boom. There's a gap move at the open out of Twitter. So, all right, folks, I got to run. I got a live trading session this afternoon at noon, wealth creation with options. So if you're interested in attending, hopefully you checked your email and you have registered for our wealth creation with options look into 2014 and how you can potentially create wealth by using equity options. It's great for folks who are looking forward to retirement, want to retire potentially with their mission objectives intact, or folks who are just looking for more conservative trading, especially a lot more conservative than weekly options. Okay, so I got to run. Happy hunting. Make sure you hedge, and I'll be back tomorrow with Friday's market wrap up over at Wealth Creation Investing. Have a great day.